Our audience for today's conversation is largely the emerging GPs. So we are talking more from the structuring. If we start very basic, what is it that they should expect before they jump into the waters?
Here's how I strongly recommend an emerging manager to approach the question, Rakesh, that you just asked. It's a process, and the process needs to be very clear up front. Because otherwise, I imagine an emerging manager kind of like the blind man feeling his way through the dark. Not only can't you see, but it's also dark around you and other people can't help you, right? You don't know what you're going to stumble into or poke
Yeah.
yourself into. You need to have someone who's like, look, let's demystify this for you. It's not rocket science. Here's what it's going to look like. You know that proverbial advisor who's going to look around the corner, tell you what's coming after you make the turn? It's really very simple to form a firm, honestly, if you've done it many times. Here's how I'd answer that question. Number one, I would say change your glasses a bit. You're not engaging in fund formation if you're an emerging manager. And I've written about this a bit in the past as well on social media. You're engaged in firm formation for your first fund, right? Because a fund formation means I have all the superstructure. I have a management company. I know how I'm employing people. I know where the carry's going, where the management fee is going. I know what my Advisors Act regulatory overlay is, and I need to form a fund. That's okay for fund two, even certainly for fund nine. But for fund one, you're really starting with a blank sheet of paper. You're not forming a fund, you're forming a constellation of entities to support that one fund that you're looking to form, but that will also then support fund two, fund three, SPV, co-investment, extension fund, all of the things you're going to be doing over the course of building this firm, this empire, if that's the vision. So we start with a very simple, rudimentary structure chart. Okay. Here's what you need to do. You need to figure out the structure of the firm, including the fund, but not limited to the fund, right? Because again, there's a number of entities that we're going to be talking about. Get a structure chart down. 90% of that, if not more, is tax driven. It's not terms driven. It's not securities law driven. It's not regulatory driven. 90+% of that is tax driven. That's part one of scoping out what this firm looks like, structure of all the entities. Step two is, okay, let's focus on this fund. What does this fund look like? What are the terms of this fund? That's really important. You're designing this fund so you can then build it and close it, sell it, right? Those are the two key elements of the answer to your question. How do you start? Design both the structure and design thoughtfully the terms of the fund.